to the Web3 Prof Podcast.
Good morning and good afternoon, everyone. I'm here with Dan Reitzik, who is the interim CEO of BIGG Digital Assets and also the CEO of Terra Zero. Dan, thanks for being with me here today.
Thanks very much.
So let's get started. First, can you just give us a bit of background? How did you get into the world of crypto or Web3 or blockchain or whatever you want to call it?
Yeah, it was probably about 2016. I'm an entrepreneur and I shared an office with a lawyer. One of the lawyer's clients was a company called Blockchain Intelligence Group, and they had created a data analytics tool for law enforcement to track crypto transactions, thefts, frauds, things like that on the Bitcoin blockchain. And they asked for some help to get the company off the ground, to get customers, to do business development, essentially. So I started looking into it. I didn't know anything about Bitcoin before this. I didn't know anything about blockchain, but I started getting really interested in it. And so I reached out to a group in Japan who I'd been introduced to slightly before that. The group in Japan had tens of thousands of Bitcoin enthusiasts. Now, this is when Bitcoin was probably around $200. And so I mentioned it to them in terms of the technology that Blockchain Intelligence Group had created, and they loved it. They loved it for the Japanese market, and so they got heavily involved. They invested in the company and started selling the product in the Japanese market. As a result of that, the Japanese group wanted to make Bitcoin for their customer base, which was, as I said, in the numbering of 20 or 25,000 individuals. And so they asked me to set up crypto mining in North America. North America obviously has favorable power rates and rule of law. And so we started a company called DMG Blockchain. I started that with Sheldon Bennett, who runs the company now. Very large scale Bitcoin, primarily mining operation in British Columbia. And we took that company public on the TSX. During the time that I was CEO at DMG, we raised over $100 million.
Wow.
And took the company to about an $800 million market cap. It was the second highest traded volume stock on the TSX Venture in 2020. And so, and during this entire period, I'd always been a big fan of Bitcoin. Bitcoin, to me, I understood. A lot of the other crypto, I didn't have as much of an understanding. And I'll tell you why I understood Bitcoin. When I was running DMG and in the early days, we had to transfer $2 million to our partners in Japan. And I went to our bank. I said, hey, I'd like to transfer $2 million to our partners in Japan. And I believe it was around $400 I was quoted, and it was 7 days to get there.
Yeah.
And I thought, this is wild. This is crazy. And so I said, well, I talked to the guys in Japan. I said, how about we send it by Bitcoin? And they said, sure, that's exactly what we do anyway. And so it cost 16 cents and took 10 minutes. And it blew my mind. And that's when I finally realized, wow, this is one incredible way of one group transferring value to another group with no third party involved and at a fraction of the cost in a very quick time. So I got very interested in Bitcoin, and I got very interested in blockchain technology, especially as a single source of truth. And so we built out DMG, ran that for about 5 years. And then I left DMG in April of 2021 to start Terra Zero. And the reason I left, obviously Sheldon, my original partner, was more than capable of running the company. You get to a point as a CEO that you want to try something new. And a new thing had come out, the Metaverse. And I looked at the Metaverse and I realized that these decentralized Metaverse worlds like Decentraland and Sandbox, they were essentially a use case for NFTs and for altcoins and others, which I'd been looking for. I'd been looking for something that actually applied really well to NFTs and altcoins. And I realized that everything in that decentralized metaverse world, whether it was land or whether it was buildings or furniture or avatars or everything, was essentially NFTs that were managed by a blockchain. And so I love this. I thought this is the perfect use case for this technology. And so I started a company called Terra Zero. We raised about $5 million privately amongst ourselves and a couple of partners. And we got real lucky at the beginning because we were one of the only companies in North America that had the technical capabilities, the programming languages, the art team, the land that you needed to build on top of. And so in the early days, we acquired and attracted companies and clients that we built metaverse experiences for, including Miller. You may have seen the Miller Super Bowl bar that we did, and that was actually made fun of on the Stephen Colbert show, which was quite funny, actually. But that was really cool because that was our very first primetime build. And what we learned was, thousands and thousands of people spent Super Bowl Sunday there. And the average amount of time that each avatar interacted with the Miller brand throughout the bar with different experiences they could do was over 26 minutes. Wow. Which in marketing is unheard of. Yeah. And so that led to us attracting Fidelity International as a client, PwC, Molson Coors, obviously, Bacardi became a client, Jimmy John's, Salesforce.com. So we ended up getting a roster of tier 1 brands and clients. And so we as I said, we built in these decentralized metaverse worlds, both Sandbox and Decentraland. And everybody had the same kind of feedback, which was this metaverse stuff is cool. It's just a 3D version of the internet. It's a way for me to experience content and not just consume it. And so, but there are problems with it. And so we said, okay, customers, and these are big, big brands. What are the problems? And the biggest problem is, how do you conduct commerce when you're a brand? When you're Bacardi, and maybe not a great example, but when you're Bacardi and you sell a product, you need to be able to monetize that product. And the problem with a lot of these Fortune 500 and Fortune 100 companies is they can't have crypto on their balance sheets. Their CFOs would lose their minds. So the problem with the decentralized world was, in fact, that it was crypto at the beginning in terms of attracting these big brands, where it wasn't just a marketing play, because it's a great marketing play. But where I see the metaverse and introverse going is more as just the next version of today's internet, an internet 2.5, a web 2.5, not quite web 3.0, but the next version of today's internet. And so the other challenges that we found working with our brands is with legal departments, where it was data and IP protection, is how do you protect IP, for example, in a decentralized blockchain world? So we set about as a company at Terra Zero, and we said, okay, we're going to listen to our customers. We're going to build exactly what they want. And so we built something called the Introverse, which is a platform that will officially launch in Q1 2024. But it is a way for small businesses and consumers and brands to all easily create their own metaverse type of experience, but is built on a Web 2 framework. And what I mean by that is it doesn't use crypto today. It doesn't use a blockchain today. It's gameplay. It's standard web programming. It enables e-commerce through Visa and MasterCard and Stripe, for example. And the reason that we do this is because the brands want this next version of the internet, but they need to be eased into it. Consumers need to be eased into it. It can't be a process or an experience where you have to learn how to figure out how to connect a crypto wallet. And then you have to figure out seed phrases for your crypto wallet. Then you have to figure out which exchange you're going to buy crypto on in order to fund your wallet, in order to even start in a Decentraland or a Sandbox. With the Introverse, you simply click on a link, like a web link. Introverse.com/Dan Reitzik would be my apartment, for example. Click on that, you jump into my apartment. It's basically the new version of social media. So instead of something like Facebook, where you have a 2D environment and you have, you post your pictures, you tell the world how amazing your life is, you message your friends, Introverse will allow people to have their own apartment at no charge, be able to customize their apartment like they would anything else, like your real apartment, be able to invite their friends or their friends' avatars into their apartment to listen to Spotify, watch TV, play games, do whatever they want. So it's a new form of social media. Introverse Pro is essentially very similar to Wix. You remember what Wix was, right? So Wix was at the beginning of the, when the internet became something that everybody was using, the challenge was, how do you take a small business and without all the programming skills and having to spend hundreds of thousands of dollars on the few shops that could actually build this stuff, how do you launch your own internet presence? And so Wix came along, and Wix said, okay, well, you can come to Wix.com, you can choose a template, you can change a few things around, and then add Shopify, and you've now got a small business e-commerce website. And we all know that that worked out real well. So I like to use an example. And so Introverse is the same thing, but it's just a 3D world. So you can come, you can choose your template, you can change things around, you can add our payment module, and now you can accept Visa, MasterCard. And it's not just to sell digital goods and virtual goods for your avatar or for your apartment. It's also to buy real world goods. So
it could be shipped. They could be shipped to you.
right to your home.
Yeah.
So the way I like to look at it is in the 1980s, a company like Nike had one way to sell you a pair of shoes. It was a store on a street or in a mall. In the 1990s, there was a second way that Nike had to monetize and sell you a pair of shoes. It was e-commerce and their website. And what we have now with Introverse and Metaverse and these types of technologies is a third way for Nike to interact with and sell you a pair of shoes. So it's just, in my opinion, it's just the next version of today's internet.
Yeah. That's amazing. Okay, that is a fascinating background. You've been in kind of the crypto Web3 space for quite a while, which is great. I want to maybe dive into and get an understanding of mining. We're here in Vancouver. We're like a mining hub of the world when it comes to traditional mining. You get involved in Bitcoin mining. Can you first maybe explain a little bit about like what does that even mean? Why are we mining Bitcoin? Give us a bit of background there.
Yeah. So basically, how the Bitcoin network works essentially is it's a blockchain, a decentralized blockchain that is secured every 10 minutes. And the miners essentially provide compute power to solve very complex cryptography in order to solve the next block, which then means that their transactions are confirmed, and then all the other miners around the world confirm those transactions, and that is a block. It's put away. It can never be changed. And that's the benefit of blockchain. All mining it's quite a simple process. All it is how much compute power each miner is contributing to the global network, which is the global hash rate. And then we get proportionally rewarded with Bitcoin for processing the transactions and securing the blockchain. So if you look at mining on an industrial scale, which is where I got involved, I was never a hobby miner when you could do it on your home computer, for example. I wish it was. But when I got involved, it was all about industrial mining. And industrial mining is complicated. When we started DMG, we secured a facility in British Columbia, and we built an 85 megawatt substation, which to me, I wasn't a power guy. Wasn't an engineer. I just said, okay, that sounds reasonable, but that's enough to power Kelowna.
Oh, wow.
Oh, yeah. So it's a lot of power. And so we built, and you need that. And so there's really just a few things that are important when it comes to mining. One is the cost of power. I would say somewhere in the 90% of your monthly cost is in power, just raw power. It's one of those businesses that doesn't require a lot of labor. There's a lot of automation that's involved, but your input cost is power. So that's, if you're looking to invest in a mining company, that's the number one thing you should look at is what is their power cost. And then obviously securing the machines. So the miners, for example, there's really only a handful of companies in the world that manufacture the chips that are used for the mining rigs. One of them obviously is Bitmain out of China. There's Canaan. There's been a couple of others that have sprang up. But it is very difficult to design these chips. And these chips, the whole point is to create faster and faster and better efficiency so that your machine wins the next block. And so people talk about halving, for example. And why is it important? Well, it's important because this is what creates a deflationary currency, which is the fact that there is less as time goes on than there is, or at least the scale of growth is less than it is today. And so right now, for example, every 10 minutes, 6.25 Bitcoin are released by the Bitcoin protocol into the miners, and they're split up essentially based on how much compute power you contribute to the network. When the halving happens, which is every 4 years and will be around April of 2024, it means that the reward every 10 minutes drops to 3.25
0.25.
Thank you. So the general point here is that mining becomes half as lucrative. So what happens is you see a lot of the inefficient miners that may have a very high power cost. They end up going bankrupt or they turn their machines off, which means that the global hash rate contracts, which means that because we're all sharing a pie, each miner that remains gets a little bit more of the pie. So this is why a lot of people believe that when you see these cycles in Bitcoin price and action, trading action, it is always around the halving. And people always wonder, well, why is that? Well, the main reason why that is because in any business, supply and demand determines the price. And so when you halve the supply, because remember, it's the miners that are selling a good chunk of their Bitcoin that they produce every month to pay their costs. When you halve that amount, the value should go up, or at least the pressure on the sell side is going to be less.
So if the number of miners often decreases at a halving because it becomes not profitable for them, does Bitcoin then inherently become more centralized or less decentralized because now there's less miners in play?
I mean, theoretically, yeah, that makes a lot of sense. But in practice, Bitcoin is mature enough now, where geographically, it's all over the world now. It used to be, there used to be a good chunk, and I don't have the numbers anymore. Obviously I haven't been CEO of DMG for a couple of years, but back when I was CEO, China controlled a good 60 to 70% of all mining.
Right.
And it was because of their power cost. That was the main reason. But it was messing up local grids. There was a lot of nefarious activities. They don't have a great rule of law in many parts of Asia.
Right.
And so when you are investing millions of dollars into a mining facility, you need the safety and security of a place like North America where people can't just come and take your mine away.
Okay.
So that's one reason. But in terms of decentralization, yeah, I mean, it will contract, but there are enough miners globally that it will always be profitable. There's great power prices in Paraguay, Uruguay, Texas has a lot of great power. East coast of Canada has excellent power rates. Kazakhstan, Russia, obviously you wouldn't be mining there anytime soon. You're probably breaking all sorts of OFAC rules.
Right.
But the point is that it's so decentralized now that even if it does contract, and remember, when it contracts, it means that the hash rate gets smaller, which means that each miner might get a bigger proportion of the pie every 10 minutes. But as the price of Bitcoin goes higher, it eventually becomes profitable again for that miner to mine again. So they turn their machines on.
Do miners move their businesses chasing cheaper power?
That's a great question. Many companies, entrepreneurs have tried exactly that, is let's rig up containers.
Right.
Let's put a bunch of miners in containers and let's move them to wherever we can find power. There are some great strategies around this. Stranded gas, for example, is a strategy that does work. They basically find these wells, they're releasing gas, no one's tapping into them. It's in the middle of nowhere, and mining literally can be self-operated. Even at DMG, we created software that managed pretty much the whole mine. There were only a few employees that needed to be there. But yeah, you could conceptually move, but again, it takes time to set up. I think that Marathon is probably the biggest miner, at least the publicly traded miners. It's probably the biggest one now. Great company. And Marathon is a US-based company, and they've just started doing exactly that, is taking I think they're taking methane gas from dumps like landfills or something, and they're turning that into power in order to then power the machines.
So are they creating, because there's got to be, I don't understand electricity, but they obviously have some kind of way to capture that power. Yeah. Are they building that next to a dump, for example, and then plugging their Bitcoin
you take a
container into it?
So you take a generator that basically burns methane or natural gas or whatever. It turns it into electricity that rolls into a container that has a few hundred miners in it, and away you go. Something to note, though, is that these miners, these things are incredibly, I don't know the word that I'm looking for, but they consume a tremendous amount of power. This is not your average computer that sits in your basement. Yeah. This is a machine with fans in it. And if you were to go to an industrial mining facility like a DMG or a Hive or a Hut 8, you could hear that thing from miles away.
Oh, really?
Oh, yeah. It's extremely loud because you've got fans running the whole time, tens of thousands of machines. So it does consume a lot of power. There's no question. But in some places, you know, and this has been a big debate in mining, is the environmental impact of mining. And when I was at DMG, we started something, and they run it right now, which is a green mining pool, which is everybody connected to that pool has to be using sustainable and renewable energy in order to mine the Bitcoin. So we're getting there as an industry. But a place like Texas, for example, they use load balancing so that they use the mining and they turn it on and off so that they can actually stabilize the grid. So there's ways that the industry is maturing to address the concerns that people have, which are very valid concerns. But remember what you're powering. And remember, I'm only referring to Bitcoin because that is, in my opinion, that is, you know, that's the GOAT.
Yeah.
That is the true first use case of blockchain technology. And that's the one that everybody talks about when it comes to consuming power, because it is the largest network out there, and it is the most secure network, I believe, ever built by humans. But where was I going with this?
So when they balance the grid, like in Texas, for example, does that mean they're effectively air conditioners are running during the day, so they use a lot of power because it's hot, and at nighttime they don't use air conditioners as much, so they turn the miners on at nighttime.
So they keep it stable, because the last thing a power grid needs is to have too much fluctuation. So what they do is they keep it stable. And in fact, in some states, and I believe Texas is one of them, the state power pays the miners to turn the machines off. So that they're curtailing their power during a certain period of time.
Interesting.
So, you know, the general point here is, like with every industry, yeah, the first few years, it's going to be a Wild West, and no one really knows the best business model. They're starting to figure it out now, where it's a win-win. It's a win for the environment. It's a win for securing a network like Bitcoin, which, you know, we talk about power, but I think I referenced, you know, sending Bitcoin and sending a couple $1 million in Bitcoin, it costing 16 cents and taking 10 minutes. That's the reality of what we could do with blockchain and Bitcoin. What does it cost to power the banking industry? What does it cost to power the credit card industry? We do look at Bitcoin for that reason, because it's the most obvious elephant in the room, but it's good to see that the industry is making strides to improve that.
So I guess heating or air conditioning maybe, or cooling is a big part of the energy usage. Yeah. Do we see miners trying to move to like cold places? Like, do you need air conditioning in your Bitcoin mining facility if you build in Northern Canada, in the Northwest Territories or something like that? Yeah. Is that an attractive business proposition? Yeah,
you absolutely want it. Well, I mean, it's interesting because you wouldn't be able to afford to have air conditioning and mining. It would just cost too much to mine each Bitcoin. Okay. So what you usually do, and what we did at DMG, is you would set up in a location that is cold for most of the year, and you would have water walls, for example, that cool the outside air as you bring that air into the mine, run it through the miners to cool them down, and then out the other side. So there's lots of different ways that people are using. The new form of mining is immersion cooling, where it's actually submerged in a liquid with the chips and the boards, and they run in the liquid, which cools them in a more efficient manner. Right. But yes, I mean, the problem, though, is that, you know, in very remote areas, you don't have access to the amount of power that you need to create these industrial mines. An industrial mine has to be a minimum of 50 to 60 megawatts. Anything. So
is that like a big warehouse full of miners? Like, what does that actually physically look like to me?
50 megawatts would probably be a 30 or 40,000 square foot warehouse, fully running with miners. Wow. Yeah, and that's probably enough to power a city of 70 or 80,000 people. Okay. So it is a lot of power. Yeah. And so getting that power into a remote area is difficult. And that's why what we were just talking about, can you create power from things like stranded gas? Yes, you can. And so that's what they're experimenting with right now. But even in the summers, in many places where it's cold enough in the winter, the summers create challenges because your machines get too hot and they don't produce the hash rate that would be optimal and ideal, and therefore you're not running at optimal performance.
So do they turn them off in the summer or just run them at nighttime, or what do you do then?
Different companies have different strategies. What we did in my day is we ran them. We ran them until we couldn't run them, and then we would let them cool down, and then we would keep running them again, and so forth. But that's where it comes, and then, we worked with Bitmain back in 2019, in Q4, we helped Bitmain set up one of the largest facilities in Texas. Now, Texas became really attractive to Bitcoin mining around that time because their cost of power was around 3 cents per kilowatt hour. The standard cost for power in British Columbia is probably around 7.
Okay.
Europe is around 15. Japan is 17 or 18 cents. So you can see how cheap power is in Texas. So everybody wanted to set up in Texas. But the problem in Texas is obviously the summers and dust. Dust is not good for these.
Okay.
So what they would do is they would create water walls, which was basically a type of air cooling system, which didn't use much technology, but used cardboard, essentially wet cardboard walls. Obviously, I'm simplifying things.
Yeah.
Which pulled, and then using the fans on the back of the miners would pull the air through the wall, which would cool it, go through the miner, and then out the other side.
Huh.
So that's essentially how they cooled it.
Wow,
Yeah.
that's interesting. I read an article, maybe it was in Inc. magazine or Forbes at one point, not too long ago, about this project. Maybe in the Democratic Republic of Congo, they had a guerrilla reserve, and during COVID, they had no revenue. But they had built this power facility off of hydro, and but they had not connected it to a grid, which seemed to be, the article seemed to refer to as a common thing, where there'd be funding for some type of environmentally sustainable power supplier, whether it was solar or wind or hydro, but there was never really a grid set up. There was no foresight to build the grid. So the miners came in, set up a mine, used the unused power, which was going to waste, which then afforded the local governments to then build a grid because they were generating revenue off of the miners, which then eventually they were able to build a grid, which I thought was an interesting use case for miners and an argument against the lack of environmental sustainability when it comes to miners, where you're actually kind of pouring into the local economy rather than just extracting the energy.
Yeah, you're capitalizing on things that might go to waste normally. But we looked at a couple of places, and there are a few places, even in Canada, where you might have a dam, and that dam isn't connected to a hydro grid, but that dam is producing enough power to power, an indigenous community, for example. But there's offtake. There's available for more power there. So there's also, and this is what's great about entrepreneurial things, is that people will find use cases like the Congo and being able to generate revenue for the local community from a sustainable and renewable source without really impacting anyone else. And so you create these benefits. That's entrepreneurialism, is being able to find ways that win-win for everybody, right?
I mean, that's the free market that we fight for and fight to have, is the opportunity that entrepreneurs can go in, solve problems, do it freely and to the benefit of local people, ideally. But I think the perspective from society is that Bitcoin miners are just extracting. They're just taking advantage of, or they're just destroying the environment. And this is I don't know. I guess it's a PR problem for Bitcoin. I mean, it certainly was when Bitcoin was pumping a couple of years ago. When Bitcoin was at $65,000. The media was attacking Bitcoin for destroying the environment. Now nobody really cares because Bitcoin's not like it was. And once it starts pumping,
not far off.
Well, it's not far off. Sure, we've turned a corner. That's for sure. But you can know that as soon as Bitcoin starts getting in the news again and it starts hitting $50,000 or $60,000, this is going to be something that's brought up. So, what are miners' responsibilities in the PR issue? That, like, do miners really need to fight this battle and be like, hey, we're actually doing good things here? Is this going to be a continual issue that Bitcoin faces?
Yeah, I mean, we're in Vancouver and British Columbia, and traditional mining is a big part of our local economy. Bitcoin mining is not like traditional mining. I mean, you talk about environmental damage. Look at gold mines, right, copper mines, and the rest of them. Bitcoin mining is simply consuming electricity. There is no damage to a physical environment. As far as I could ever recall in our days.
I guess it depends on where the power comes from. If it's burning coal, then that might be different. But generally speaking, I mean, we have 100% hydroelectricity in this province, and so that's not the case, right?
Yeah, I mean, if you're obviously, yeah, absolutely. So in British Columbia, so DMG, for example, is all renewable energy. It's hydropower, and most places have cheaper hydropower than others. Now, there are some places, in China, for example, back before the Chinese government banned mining on an industrial scale, it did use dirty power. But it's not good for anybody.
Yeah.
There are places in the United States that still use coal power. Now, they are transitioning away from that. When I was with DMG, we actually did a partnership with Marathon Digital, which is the largest miner in, at least by market cap in the U.S., and that was to form something called the Digital Currency Miners of North America. And it was specifically for what you're talking about, which is how do we as an industry, how do we mine responsibly and power this blockchain that enables this new technology, but at the same time don't add to the ESG problems and the environmental problems, and also at the same time don't facilitate things like money laundering and nefarious funding of terrorism and OFAC compliance. And so we formed that. And, you know, I'm pretty proud of the fact that we do have software that allows us to track where miners are sending coins, for example. We have the ability, in terms of technology, we don't have the industry desire yet, but we do have the ability to ensure that a transaction is conducted by a miner that is located in North America that uses renewable power and has been fully KYC'd. Because right now, if you were to do a transaction, that transaction could conceivably be processed by a miner, you have no idea, that is in North Korea.
Right.
That's a problem. And so those technologies are out there. The industry is starting to mature. Remember, this is an industry that's a decade old. And on an industrial scale, it's 5 or 6 years old. So it's learning, it's maturing, it's becoming more and more responsible.
Is it a business strategy for a place like North Korea to set up miners in order to generate revenue for their country? Do you think that's happening? Like, as you said, that it kind of struck me. I actually never really considered that before.
You know, in the early days of industrial scale mining, a lot of it obviously happened in Russia and the Russian republics and China. North Korea, I'm sure Iran does a lot of mining. And so, you know, it's actually a very good point, is how much mining is done in those areas. The good news about blockchain technology and the good news about Bitcoin is that this information is all available.
Public. Yeah.
It's public. We can see where the global hash rate is. And what I will say is it's very insignificant. If it's anything in North Korea, Iran, etc. But it was a problem back in the early days. It was a problem in some of the Russian states, for example, where you would have miners go set up, and it would be the perfect opportunity to, first of all, you could money launder, for example. But also the security, there's no rule of law there. So miners would set up, spend millions of dollars, and then the facility would be confiscated, for example. So it was a crazy industry back in the early days. It is much more mature now.
Yeah. It
is an industry that's pretty regulated. It's an industry where most of the big players are publicly traded companies. There is compliance, there is transparency. So that's all sort of maturing itself. The environmental impacts are being mitigated. So it's just, it was a baby before industry. Now it's becoming an adolescent industry.
I've seen some products come out where you can buy a little miner that heats your house. So we have these type of, commercial applications that can be used in a residential environment where I can earn a bit of Bitcoin that could effectively offset the heating costs of my bedroom in the winter or something like that. Do you think that there's a market for those types of things? Or is the complexity around mining Bitcoin so sophisticated now that the individual guy at home can't really compete with the industrial complex of Bitcoin mining?
It's a good question. You know, as you know, back in the day, you could mine on a regular computer.
Yeah.
But as the difficulty gets harder and harder, which is how the Bitcoin protocol is designed, you need more efficient and faster chips in order to process that. those aren't available to consumers. Those are available on a large scale to industrial miners. It's funny you bring up that topic about someone buying a miner for their home and being able to heat their home. Conceptually, you could buy a miner for your home, and you probably spend about $2,500. If you get one, you plug it in. You'd probably never sleep again because they're pretty loud. So that's your first problem.
Right. Yeah. Okay.
The second problem is it will probably consume more energy than it would cost you to heat your house anyway.
Yes.
So you might break even. You might make a little bit, but you know what? The negatives definitely outweigh the positives on that. Bitcoin mining is becoming an industry. It is an industry like anything that needs economies of scale. So when you think about Bitcoin mining, you think massive amounts of power, you think small amounts of labor, and economies of scale.
Yeah.
So yeah, that's kind of how it works.
I did the calculation for one of these little heaters to see like how long would the payback period be at the cost of power here in British Columbia relative to the current price of Bitcoin. And it was like 5 years or something like that, like way too long really to make it any economic sense. But at a $70,000 Bitcoin or $100,000 Bitcoin, it does make it a reasonable option. I have a former student who's taken a couple of my crypto courses who's trying to figure out how to heat hot tubs with a Bitcoin miner. So I think what's interesting, and like we commented on, entrepreneurs find a way, right?
Yeah.
And so in cold places, we need heat, and Bitcoin miners create heat. So maybe there's opportunities there, especially potentially, I guess, when the price of Bitcoin does get a lot higher, which we all anticipate.
On an industrial scale, it's funny you say that because we experimented many times with what do we do with all the excess heat that these miners are generating. So we talked to, at the time, it was cannabis companies that were all springing up.
Right.
They needed heat for their greenhouses. Could we set up greenhouses on the side of our Bitcoin mining facilities and capture that heat? I'm not sure anybody has done it that successfully yet. People are trying it, and someone will perfect it. But getting back to your point about the payback on a miner that you buy today, and will it pay back in 5 years? The issue with Bitcoin and how it was designed is we have no idea what the future holds.
Right.
The higher the price of Bitcoin, the more hash rate comes on the network, which means the less of the pie each miner receives proportionally. So that fluctuates every month, every week. It changes. And so it's very difficult to forecast what tomorrow will bring. What we do know is when crypto is, or when Bitcoin is on an upswing, and it seems to be a cycle every 3 to 4 years, mining is extremely profitable for about a year and a half, 2 years, and then it becomes less so because the miners are less efficient, more computers are on the network, which means the pie is smaller, and then there's always some catalyst that seems to hurt Bitcoin every cycle. Back when I started DMG, the catalyst was ICOs. This was, everybody said, oh, let's create this ICO, we'll create a new coin. Well, the problem with that is most of them were scams.
Yeah.
And so that drags down a whole industry. And then it takes 3 years to regain the trust of the public. And then the next cycle, it was NFTs.
Yeah.
And then NFTs became this thing where, well, maybe that's not worth what I think it's worth. And this time, I think what we're going to see, and I'm pretty bullish on Bitcoin, especially through 2024. I think what we're going to see is we're going to see ETFs approved in the United States. And what that does, it doesn't necessarily benefit so much the exchanges or necessarily the miners. I mean, the miners obviously can supply the ETFs with their Bitcoin. But what it does is it creates an ability for your average person to have exposure to Bitcoin and crypto. And the problem today is 97% of the global population has never owned a crypto wallet. So very few people have ever even tried to do this and hold this as an asset. And they certainly aren't going to set up a miner. And it's too complicated to hold your own Bitcoin. They're worried. They hear about losing private keys and these crypto wallets and everything else that's confusing. What an ETF does is it gets people the ability just through their regular broker to get exposure to Bitcoin or crypto and get comfortable with it. And then assuming they get comfortable with it, maybe they decide, maybe I want to start mining it, or maybe I want to start buying it from exchanges and being able to self-custody it myself in my hardware wallet or whatever. So I think these ETFs are going to be a huge catalyst for Bitcoin price, as well as for volume.
I think, yeah, you say you're bullish on this. And I mean, I think we see an environment where it's so likely that these ETFs get approved. There's not many voices out there that are saying it's not going to happen. You know, by first quarter of 2024, we should have half a dozen or whatever ETFs approved in the United States, which gives easy access to capital for a lot of for Bitcoin. So when Bitcoin miners want to sell their Bitcoin, because they have to sell their Bitcoin in order to pay all these energy costs and so on and so forth, how do they do that? Does their Bitcoin go to a centralized exchange, and do they exchange it there? Like, what does that process actually look like?
Every miner is different. Some miners, and I don't obviously want to mention names, but some miners have made, the conscious decision that they will continue to raise fiat capital in order to pay their bills and just keep stacking their Bitcoin.
Okay. Yep.
Which I think was a solid strategy. It didn't sound like a solid strategy a couple of years ago, but today that turned out to be a very solid strategy. The other miners usually sell a portion of their Bitcoin when they need to pay their bills. And every miner is obviously different, but yeah, they use exchanges. They usually do OTC trading. It's not like they have their app and then they trade a bunch of Bitcoin. They usually do an OTC trade with companies like ours, Netcoins, for example, which just started OTC trading. But miners are the lifeblood of the supply of Bitcoin. And remember, ETFs in Bitcoin is different from ETFs and other things in the sense that Bitcoin is finite. That is what makes it so unique and so beautiful, is that there can only ever be 21 million Bitcoin. So when the ETFs are buying up Bitcoin, the supply of Bitcoin cannot be increased. It is what it is. And so that should inherently increase the value and the price of Bitcoin over time.
And it's interesting because, so there's only ever going to be 21 million Bitcoin. I think, it's something like 100 years from now, the last Bitcoin.
2140.
2140.
2140.
Okay, a lot less than 100 years. Or no, sorry.
A little more.
A little more than 100 years. So
we won't be around.
We certainly won't be around. And so there's the 21 million, and we know like Satoshi Nakamoto's wallet's got 1 million Bitcoin in it that have never been touched. There's a ton of Bitcoin that's been lost because seed phrases have gone missing, and we all hear the story of the guy looking through the garbage dump looking for his Bitcoin. And so there's another few million Bitcoin that have disappeared, and all of a sudden you start to realize that there's not that many Bitcoin out there that you can ever actually own.
There's only 2 billion left to mine over the next 100 years.
2 million,
like
2 million left.
2 million. So approximately 19 million have been mined to date. And remember, this was designed, and this is what makes blockchain and Bitcoin so unique and perfect, is it was designed to be deflationary. So when it started, I should know the answer to this, but there was a number of Bitcoin that were released every 10 minutes.
Right.
And this was, Nakamoto and
Hal Finney
and a couple of other people mining, basically. Yeah. They were the ones securing the network. So the first Bitcoin, came out and belonged to them. But as time goes on, it became harder and harder and more expensive through power and energy consumption and compute power to mine each Bitcoin. And it halves every 4 years. So in a few months, it's going to be 3.125 Bitcoin released every 10 minutes. In 4 years and 3 months, it's going to be 1.65. In 8 years, it's only going to be 0.825 Bitcoin every 10 minutes. So even within a decade or decade and a half, the supply that's being put into the market, so you think about money supply. Well, we could just print money, as we just did during COVID, and you can see what that leads to. It leads to massive inflation. But Bitcoin, you can't just print it. There is a limited amount that comes out, and it's diminishing over time, which should conceptually make the value of Bitcoin always infinitely go higher.
Yeah.
A good question that everybody always asks is, so what happens in 2140 when all the Bitcoin is mined? How do the miners secure the network? Because their job is to secure this network that is unbreakable, because there are millions of copies of the same ledger around the world.
And their incentive is they earn
Bitcoin for doing
Bitcoin.
it.
So if there's no more Bitcoin to be mined, why would they secure the network?
So now this is not a problem that you and I will have to worry about, but it is a problem that people talk about all the time, and it's a great conversation. Is how it was originally designed was that for the first 20, 30 years of Bitcoin, the miners would be incentivized to secure the blockchain and to process the transactions and everything else for the reward of Bitcoin, and that transaction values, while small at the beginning, would become much larger later on. So when you're a miner, you get a piece or a chunk of Bitcoin for your mining compute power, and you also get a much smaller piece for all the transactions that were processed during that block. So the point is as Bitcoin gains usage, there should be enough on the transaction side in order to make sure that the miners stay in place.
When you're with DMG, did you guys measure how much of your revenue came from transaction fees versus the rewards for mining?
We would have. I did not.
Yeah. Was it insignificant?
It was far less. Yeah. It would have been, if I'm hazard a guess, maybe 2 or 3%. Okay. Versus 97, 98%.
Sure.
Yeah.
And then
it's probably a little bit more. But it's not at that point. And again, we don't have to worry about that for 40 or 50 years.
Right.
And I should point out, I'm not a believer in Bitcoin as a currency. I don't believe that this is something that people buy and they go and buy a coffee with. I think that doesn't make a lot of sense, because any technology, if it's going to win, has to be better than what it's replacing. Mm-hmm. And is Bitcoin and my wallet transacting at the Starbucks easier than me pulling out my credit card? No, it isn't. So why would I change? What Bitcoin is brilliant at is moving value between two parties without anyone else having to be involved. And that is the value of it. So when you buy Bitcoin, you're not buying a Bitcoin. You're buying a piece of a technology network that can move and transact value around the globe seamlessly. And that's kind of how I look at Bitcoin.
That's great. I like that. And, this has been a good conversation, Dan. I feel like I learned a lot about mining today. And I had a whole list of questions to ask you, and I didn't think I asked you a single one because it was such a good conversation about what you were like kind of in the flow zone. So this has been super helpful. I think this is great to understand the depth of mining, the environmental impacts of mining, understanding, the social implications of what Bitcoin can do for society, for like transferring wealth from one place to another at a very cheap and fast pace. So I really appreciate you being with me here today. It's been such a fruitful and beneficial conversation. Thanks, Dan.
Appreciate it. Thank you.